Welcome back, everyone, to the deep dive.
Great to be here.
Today, we're really digging into a specific company, Narayana Hrudayalaya Ltd. We've got a whole pile of documents, their latest board meeting notes, financial results, the press release tying it all together, and actually a newly updated insider trading code, too.
Yeah, it's quite the stack. It gives us a chance to look under the hood, doesn't it? See the performance numbers, sure, but also how they operate day to day and the rules they set for themselves internally.
Exactly. So our plan today is to sort of pull out the key stuff for you from all these formal documents. We'll hit the main financial figures, the operational highlights, what they're actually doing, and then unpack these governance rules, give you a quick but thorough understanding.
And there are definitely some interesting bits hidden in the details, things that might surprise you.
All right, let's jump right in with the financials then. The press release gives the headline numbers. Looking at the consolidated results for Q4 of their fiscal 25, operating revenue was 14,754 million.
Which sounds like a big number, and it is. But importantly, that's an 18.4% jump compared to the same quarter last year. That's strong growth.
And their operational profit? EBITDA.
Also grew nicely, 3,846 million for that quarter, Q4 FY25, and that was up 22.2% year on year. So even better growth on the EBITDA line.
Okay, so a really strong finish to the year. What about the full picture for FY25?
Yeah, the full year held up well too. Total operating revenue hit 54,830 million. That's a, let's see, 12.1% increase over the previous year, FY24.
Solid. And full year EBITDA?
Came in at 13,684 million. Again, good growth there, 11.9% year on year. Pretty consistent with the revenue growth, actually.
What does that mean for their margins?
The EBITDA margins are looking healthy. For Q4, it was 26.1%. And for the full year, FY25, it landed at 25.0%. I mean, for healthcare, those are pretty robust numbers.
Okay, now let's look further down the income statement. Net profit, PT, how did that track?
Right, so PAT, or profit after tax, showed growth, but maybe a bit more modest compared to revenue and EBITDA. For Q4 FY25, PAT was 1,962 million. That's a 4.4% increase over Q4 last year.
Only 4.4%. And the full year?
Full year FY25 PATI was 7,898 million, and that was, well, almost flat year on year, only up 0.5%.
0.5%. Okay, that is a noticeable difference compared to the top line growth.
Exactly, and you see that in the PATI margins too, 13.3% for Q4 and 14.4% for the full year. It suggests, maybe higher depreciation from investments or interest costs, or maybe tax impacts were more significant factors for the bottom line in FY25.
That makes sense. A key point to note. Now, where's this revenue growth coming from? You mentioned the breakdown is interesting.
Yeah, definitely. If you split it between India and their Cayman Islands operations, you see quite different stories, both positive but different speeds.
Okay, so India first.
India revenue for Q4 FY25 was 11,088 million. That's up 10.7% year on year. Pretty steady. And for the full year, India brought in 43,499 million, which is an 11.3% increase. Solid, respectable growth in their home market.
All right. And the Cayman Islands, you said that was different.
Oh, yeah. That's where things get, well, it's explosive. Cayman revenue for Q4 FY25 hit 3,797 million. Get this, that's a 50.2% increase compared to Q4 last year.
50%. Wow.
50.2. And for the full FY25, Cayman revenue was 11,829 million, showing a full year growth of 15.3%. Still very strong for the year, but that Q4 number is just huge.
So what's driving that massive Q4 jump in the Caymans? Did the documents give any clues?
Well, the press release does mention it. It says the new hospital facility they built in Camana Bay is now fully operational and, quote, contributing meaningfully. So it seems pretty clear that their big investment there is really starting to ramp up and deliver results.
Okay, so that new infrastructure is key. Makes sense. And just quickly, the documents mention adjustments and exchange rates for these consolidated numbers.
Right, standard stuff. They note that the consolidated figures pull in numbers from entities like NVDSHPL, and they account for eliminating transactions between group companies. For the Cayman number specifically, they used an average exchange rate of 84.57 rupees to the US dollar for the full FY25 conversion. Just housekeeping, but good they disclose it.
Got it. And lastly, on financials, what about debt? Where do they stand?
As of the end of March 2025, their net debt was INR 5,330 million. That translates to a net debt to equity ratio of 0.15.
0.15. That sounds quite low.
It is. It suggests they aren't heavily leveraged. They do note that a chunk of this debt, about US of $86.8 million, is in foreign currency, so there's some FX exposure there. But overall, the balance sheet looks pretty strong from a debt perspective.
Okay, so wrapping up the financials for you listening. You're seeing good overall growth, right? Driven by solid Indian performance and this really standout acceleration in the Cayman Islands, likely thanks to that new hospital. Profitability strong, although net profit didn't grow as fast in FY25, paints a picture of, well, successful expansion.
Definitely. Now let's peel back the onion a bit more. What's happening operationally? What are they actually doing to get these numbers? The press release gives some cool highlights here.
Yeah, this is where you see the complexity. They did over 1,200 robot-assisted surgeries across the group in FY25.
1,200. That's a lot of high-tech procedures. And they drill down further. 332 of those were specific robotic cardiac surgeries in the full year. That shows real specialization in advanced heart care using robotics.
And it looks like the pace picked up towards the end of the year, over 380 robotic procedures just in Q4.
Yeah, it's like, what, more than 4 a day across the group in that quarter. Shows increasing adoption or capacity, maybe both.
They also called out specific hospital achievements. The Narayana Institute of Cardiac Sciences in Bengaluru, NICS.
Right, their big flagship heart hospital. In Q4 alone, they performed 301 minimally invasive cardiac surgeries, plus 40 TVI procedures.
TV, that's the transcatheter aortic valve implantation, right? Less invasive valve replacement.
Yeah.
Exactly. High-end stuff. And another milestone mentioned was at the NHSRCC Children's Hospital in Mumbai. They hit 100 epilepsy surgeries.
And they did that in just 2.5 years, which sounds pretty quick for such a specialized pediatric procedure.
It does suggest building expertise and volume rapidly. And one more, MMI Narayana Hospital in Raipur treated over 3,000 patients in radiation oncology just in Q4 FY25. Again, showing significant volume in cancer care.
So these aren't just abstract numbers. These are real procedures, real patients. How does management connect this activity to the financial results that the CEO's comments?
Yeah, the group CEO, Dr. Emmanuel Rupert, he links the record revenues and profit margins directly to this kind of operational performance. For India, he points to more domestic patients coming in, getting better prices or realizations, and also optimizing the mix of patients based on who's paying insurance, government schemes, private pay, etc.
Okay, makes sense.
He also highlighted that units beyond the main flagships, like those in the southern peripheral region and the north, showed significant growth, adding to the overall strength. And he confirmed the Cayman impact.
Absolutely. He specifically mentioned the significant contribution from the Cayman operations, stating they delivered record revenues and that the new Camana Bay Hospital is, again, fully functional and a key driver. It matches the numbers perfectly.
Did he mention anything else starting up?
Briefly, yeah. Their integrated care business, which seems to be about clinics and maybe outpatient services, is apparently picking up steam, with new clinics getting more footfalls. So some diversification efforts there, too. And there's a quick mention of a joint venture agreement, also in the Cayman Islands, focused on setting up cancer centers back in India. But they note that operations hadn't actually started by the end of March 2025, so that's more of a future thing.
Right. So for you listening, these operational details really flesh out the story, don't they? When you hear about 1,200 robotic surgeries or 3,000 radiation oncology patients at just one site in a quarter, you get a real feel for the scale and the type of advanced care they're providing.
Exactly. These successes are what ultimately feed into those financial numbers we talked about earlier.
Okay, let's shift gears now. Completely different angle, governance and compliance. The backbone, really. What came out of the board meeting?
Two main things highlighted in that document. First, they appointed a new secretarial auditor, Mrs. Vinod Kothari and Company.
Okay, and the details.
It's a 5-year term, starting from this financial year, FY 2025-2026. But, importantly, it's subject to shareholder approval first.
Right, and who are they?
They're described as practicing company secretaries based in Kolkata. The notes say they have like over 35 years of experience in this kind of work, secretarial audits. They've got offices across India, a decent-sized team, seems like an established firm. They even mentioned some awards they received from the Institute of Company Secretaries of India.
And crucially, any relation to the company directors?
No, the document explicitly states they are not related to any directors. That's key for ensuring their independence when they audit the company's compliance. Their appointment follows the rules in the Companies Act and SEBI regulations.
Standard procedure for a listed company, but good to see the confirmation of independence. What was the other big item?
The other one is pretty meaty. A newly amended code of conduct for prohibition of insider trading and related principles for fair disclosure. This document goes into quite a bit of detail.
Okay, insider trading rules. Always important. What's the main goal here?
Fundamentally, it's about setting ethical standards for how employees and others connected to the company handle sensitive information and trade the company's shares. It's designed to prevent insider trading, obviously, and maintain confidence in the market. Trust, really.
Makes sense. The code defines some key terms upfront. Let's maybe walk through a few important ones. Unpublished price-sensitive information, UPSI, what exactly counts?
Yeah, that's the core concept. UPSI is basically any information about the company that isn't publicly known yet. But if it were made public, it's likely to have a material effect on the stock price.
Like what? Give us some examples.
The code lists several. Financial results before they're announced, obviously. News about dividends. Major changes in the company's capital structure, like a stock split or buyback. Big M&A deals, buying another company or selling off a big part of their own business. Changes in key management personnel or even their auditors. Plans for raising significant funds. Major contracts or agreements. Stuff like that. Things that investors would definitely react to.
Got it. So that's the information. Who are the people covered by these rules? It mentions insider.
An insider is defined pretty broadly. It's essentially anyone who has access to or is just in possession of this UPSI. Could be an executive, sure, but also maybe someone lower down involved in preparing financials or part of a team working on a confidential project.
Okay. Then there's connected person. That sounds even broader.
It is. A connected person is someone who's had some kind of association with the company within the previous 6 months. Could be professional, business, employment that would reasonably allow them access to UPSI.
So employees, directors, who else?
Consultants, auditors, lawyers, bankers working with the company. Even includes close relatives of these people if they live together, on the assumption they might overhear or inadvertently get access to UPSI. The code says there's a presumption these people are connected, but they could potentially argue they didn't actually have access. It's a wide net.
And designated persons. Is that a subset?
Yes. Designated persons are specific employees and individuals identified by the company itself, usually senior management, people in finance, legal, heads of departments who are considered most likely to have UPSI just because of their job function. They face the strictest set of rules under the code.
Okay, so we have the sensitive info, UPSI, and the people who might have it, insiders, connected persons, designated persons. How are they supposed to handle this UPSI?
The number one rule is need to know. It's simple. You only share UPSI with colleagues who absolutely need that specific information to do their jobs. No casual chat about upcoming results or potential deals, strictly business necessity.
But sometimes they have to share it externally, right? Like with auditors or lawyers.
Absolutely, and the code covers that under legitimate purposes. Sharing UPSI is allowed for valid business needs during an audit, for legal advice, with banks for financing arrangements, etc. But, and this is important, the code stresses this can't be used as an excuse to dodge the rules. And whoever receives the UPSI for a legitimate purpose, the auditor, the lawyer, they effectively become an insider too and are bound by confidentiality.
How do they keep track of who knows what and when?
That's where the structured digital database comes in. It's a mandatory requirement. The company has to maintain a secure digital log.
What goes in the log?
It needs to record things like who shared the UPSI, who received it, the nature of the UPSI shared, the date and time, and the reason, the legitimate purpose. And it needs security features like timestamping that can't be altered, audit trails to see who accessed it. They have to keep these records for at least 8 years, too. It creates accountability.
Okay, that's managing the information flow. What about the actual trading of shares?
Big restrictions there.
Yeah.
Main one is the trading window closure.
The blackout period.
Exactly. The company designates periods, usually leading up to the announcement of financial results or when any other major UPSI event is happening, when the trading window is closed. During this time, designated persons, and potentially others, are flat out prohibited from trading in the company's securities. No buying, no selling.
And what about when the window is open? Can designated persons trade freely then?
Not necessarily. There's a pre-clearance requirement for trades above a certain threshold.
Ah, okay. What's the threshold?
For designated persons, if their trades in the company's shares are likely to exceed a cumulative value of 10 lakhs within a financial year, they need to get prior approval from the compliance officer before making the trade.
Even if the window is open?
Yes. And when they apply for this pre-clearance, they have to give an undertaking confirming they don't possess any UPSI at that moment. And crucially, if they do receive UPSI after getting clearance, but before they execute the trade, they're obligated not to trade. It's another safeguard.
And there's a rule about quick buy-sell or sell-buy actions.
Right, the contra-trade rule. This prohibits designated persons from entering into an opposite transaction within 6 months. So if you buy shares, you generally can't sell any shares for 6 months. If you sell, you can't buy for 6 months.
Why that rule?
It's aimed at preventing people from profiting based on short-term fluctuations, potentially driven by information they might have. Discourages short swing trading by insiders. They mention a possible waiver for a genuine personal emergency. But if you violate this rule, any profit made is liable to be disgorged, basically given back, likely to SEBI.
These rules are quite detailed. What if someone breaks them? What are the consequences?
The code lays out pretty severe consequences of default contravention. From the regulator, SEBI, the penalties can be huge. Fines up to 25 crore or 3 times the profit made from the illegal trade, whichever is higher.
25 crore, wow.
Yeah. And it doesn't stop there. It can even lead to imprisonment for up to 10 years under the SEBI Act. Plus, the company itself can take disciplinary action against employees, things like freezing wages, suspension from work, or making them ineligible for employee stock options, ESOPs.
So, real teeth to these rules. What about proving innocence if someone trades while having UPSI?
That's a key point the code highlights. The burden of proof shifts. If an insider trades securities while they are in possession of UPSI, the law presumes that the trade was motivated by that knowledge.
So they're presumed guilty.
Not exactly guilty, but the onus is entirely on the insider to prove that they did not trade based on that UPSI. It's a high bar to clear. Makes it very risky to trade if you even might have UPSI.
Does the code mention how they investigate potential leaks?
Yes, briefly. It outlines a process where the compliance officer would investigate suspected leaks of UPSI. They might bring in external investigators if needed, and the findings would be reported to the company's audit committee. So there's an internal mechanism to follow up on potential breaches.
Okay. And finally, it mentioned fair disclosure principles. What's that about?
This relates to how the company communicates UPSI to the public once it's ready to be disclosed. The core idea is prompt, universal, and non-discriminatory disclosure. Get the information out quickly to everyone at the same time.
How does that work in practice?
It means using platforms like stock exchange filings and press releases. It also specifically addresses how to handle situations like meetings with analysts or institutional investors. If any information shared in those selective forums could constitute UPSI that hasn't been made public yet, the company must ensure that information is promptly made generally available, often by putting transcripts or recordings online. Ensures a level playing field.
So stepping back and looking at this whole amended code, the definitions, the procedures, the databases, the penalties, what does the level of detail tell you about the company's stance?
It signals a very serious commitment to compliance and market integrity. This isn't just a boilerplate policy. The specificity around things like the digital database, pre-clearance thresholds, contra-trade rules, and the explicit mention of the burden of proof, it all points to a robust, well-thought-out framework. It suggests they understand the risks involved with sensitive information in a listed company and are putting serious mechanisms in place to manage it.
Right. It builds that foundation of trust we talked about earlier.
Exactly.
Okay, well, that brings us pretty much to the end of this deep dive. We've journeyed through quite a bit from Narayana Hrudayalaya's recent documents.
Yeah, we hit the financials, first saw that solid growth, especially the really impressive jump in the Cayman Islands, alongside steady profitability.
Then we looked at the operations behind those numbers, the high volume of advanced surgeries like robotics and TVI, and the milestones at specific hospitals. Really gave a sense of their capabilities.
And we just finished unpacking the governance side, the auditor appointment, and importantly, that very detailed amended insider trading code, showing their focus on compliance and ethical conduct.
And hopefully, by going through the actual source documents like this, you've gained a much clearer, more specific understanding than you'd get from just reading headlines. You see the numbers, the actions, and the rules.
It gives you that more granular view, for sure.
Absolutely. So as you think about everything we've discussed, the strong operational performance-driving growth, particularly in new markets like the Caymans, combined with this simultaneous effort to tighten up internal controls through things like the detailed insider trading code. Here's a final thought for you. How does this dual focus, pushing for growth while also reinforcing rigorous compliance, work together to build long-term trust and maybe enhance the value of a company, especially one in a sensitive field like healthcare? What part of this picture stands out most as you consider Narayana Hrudayalaya's path forward?